We've had a very thought-provoking evening with so many leaders from across investing, policy, business, and capital allocation here this evening, talking aloud about the big picture of the issues that animate us around the Indian markets. If I were to sum up some of the key strands and the takeaways from these discussions, the first one I would say would be look beyond the last year. As Aparna Karnik said, short-term underperformance can be misleading, though Indian equities have still delivered strong returns over the last 5 to 10 years. Number two, valuation worries are real. As Siddharth Daya, among others, cautioned, many stocks look overheated beneath headline index numbers. Number three, diversification is key. As Saurabh Mukherjee and Abhishek Tiwari pointed out and cautioned us, spreading investments across asset classes and global markets is essential. Number four, be selective going forward. It's a theme that kind of ran across all sessions, as I understand. Returns are likely to come from specific sectors and stocks rather than broad market rallies. Fifth, SIPs could be moderated. Chirag Setalwag, for example, pointed out the most structural challenges of India's emerging young investor base, of people who are investing who haven't seen lows before. And that brings a different kind of challenge for investors and for expectations around the stock markets. Now, at a time when caution seems to be the overriding master theme, another key takeaway, of course, is that don't chase fads and look at long-term value. I think it would be fair to say that we are living through a period where uncertainty is no longer an exception. It is the operating environment. So amid this message of caution, may I add 3 quick points. First, history tells us that wealth has always been created in uncertain times, not in spite of them, but because of how investors respond to them. Second, India today sits at a fascinating intersection. As Mahalakshmi, my colleague, always points out to me, never before have Indian investors had so many opportunities with so many products and with so much access to capital markets. I think we shouldn't forget that. It's worth reminding ourselves that India has over 21 crore Demat accounts, as Bodhi also pointed out. That's more than the populations of countries like Mexico, Russia, Japan, or the Philippines. This means about 13.6 crore individual unique investors. And overall, India's equity market capitalization has crossed $5.29 trillion, which makes us the 5th largest in the world and about 4% of the global market cap. As we move towards becoming the 3rd largest economy in the world, certainly well before the end of this decade. These are not just big numbers, they also reflect something more important. For the first time, domestic capital is shaping market outcomes in a meaningful way. Retail investors, SIP flows, pension and insurance money are no longer just riding the market, they're also helping to stabilize it. This has changed how volatility plays out and how risk is absorbed, even when global capital remains fairly cautious. The Indian market today, therefore, is more deeper and more resilient, but it is also much more demanding, and for most people in this room, for example. And as we move away from easy, broad-based rallies to a market that rewards selectivity, patience, and judgment. So this is why I think today's conversation becomes even more important, because this is not just about investing. The pool of savings ultimately powers India's real wealth creators, our businesses. It fuels expansion, innovation, and job creation, all of which are absolutely central to the idea of a Viksit Bharat by 2047. This is why we at Moneycontrol curated this summit. As India's largest financial platform, at Moneycontrol, our role is to help investors cut through the noise so that they can make more informed decisions, deploy capital wisely, and build resilient personal wealth. And when investors do well, the nation does well. Uncertainty makes clarity, discipline, and conviction far more valuable. So to all of you who spent your valuable time with us today, I hope you found some of the answers to the big questions of our times in today's sessions, and hopefully key takeaways that are more directly relevant to your work. But this is, I think, only the beginning of a long conversation. So a big thank you to our partners Dezerv, Sandeep Jetwani, Sahil Contractor, Weber Porwala here. I think we definitely deserve to do much more interesting things together as we go along. Thank you very much, ladies and gentlemen.
Welcome to Money Control, your ultimate destination in the ever-evolving world of finance, business, markets, policy, and technology. India's preeminent news platform, driven by facts and fueled by data. A platform made in India, and for the world. Moneycontrol.com has a staggering reach of 100 million plus monthly active users and 6.02 million daily active users. Being a transformative digital force, reshaping how we engage with money, markets, and news. Setting us apart is our commitment to delivering accurate information and empowering financial decision-making in a dynamic ecosystem. Seeking a deeper dive into the financial realm, we present Money Control Pro, a powerhouse of exclusive insights, providing actionable investment ideas and expert analysis. Because in today's fast-paced world, informed decisions demand both information and expertise. And we have 1 million plus Money Control Pro total paid subscribers and 100% return in 1.5 years, beating the market. Explore market trends, access expert opinions, and utilize essential financial tools all at your fingertips. Join the millions who trust Moneycontrol.com for their financial journey, where facts meet finance and data drives decisions. Think markets, think Money Control.